gentlemen, good day and welcome to Matrimony.com Q1 FY2024 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Banerjee from ICICI Securities. Thank you and over to you, sir.
Hello. Welcome everyone on behalf of ICICI Securities to the Q1 FY24 earnings conference call of Matrimony.com. Thank you. First of all, thanks to the management for giving us the opportunity to host the call. We have Mr. Murugavel Janakiraman, the Chairman and Managing Director, and Mr. Sushant Pai, the Chief Financial Officer, who are attending the call on behalf of the company. First, I'll hand over to them for opening comments. Over to you, sir.
Thank you, Abhishek Banerjee. Good evening, everyone. As indicated in our quarter 4 call, our growth momentum has picked up in quarter 1 as compared to quarter 4. We've also shown acceleration in profitability in quarter 1. In quarter 1, on a consolidated basis, we achieved a billing of rupees 124.5 crore, a growth of 2.9% quarter-over-quarter and 6.9% year-on-year. Revenue of 123.3 crores, a growth of 7.7% quarter-over-quarter and 6.3% year-on-year. So basically, on a billing basis, we almost reached a threshold of 500 crore run. So the next milestone, big milestone for us, will be reaching 1,000 crore within the next 5 years or so. The key highlights for the matchmaking business are as follows. A billing at rupees 122.1 crore, a growth of 3.8% quarter-over-quarter and 6.6% year-on-year. The revenue at 120.6 crore, a growth of 8% quarter-over-quarter and 5.6% year-on-year. We added 2.8 lakh paid subscription during the quarter, a growth of 6.9% quarter-over-quarter and 11.5% year-on-year. We continue to track the impact we create for our customers. We're happy to state that we create about 27,800 plus success story in quarter 1. I'm also happy to share that Matrimony.com has won ET Brand Equity Shark Award for the best use of digital and social media for its AA-based Valentine's Day campaign. Now coming to the marriage services business, revenue was at 2.7 crore, a decline of 5.8% quarter-over-quarter and a growth of 49% year-on-year. Losses in the quarter was rupees 3.1 crore, same as last quarter. On the billing and revenue outlook for quarter 2 as follows. Matchmaking billing revenue on a year-on basis is expected to show a high single-digit growth in quarter 2, but a decline compared to quarter 1 as quarter 2 is seasonal quarter. On wedding services, the growth is expected at similar level and the losses will be at similar levels in quarter 1. Let me now pass on to Sushant to comment on the key profitability items.
Thanks, Muruga. Firstly, I would like to provide an update on the ongoing Google case and implications on our financial performance. The company had filed a commercial suit in the Honorable Madras High Court against Google LLC and its affiliates, challenging the service fee charged under the Google Play Developer Distribution Agreement, effective from 26 April 2023. This was pertaining to payments made by company's customers for in-app purchases downloaded from the Google Play Store. In this regard, the company, among other reliefs, sought for injunction from the Honorable Madras High Court against delisting company's apps from the Google Play Store. The Honorable Madras High Court restrained Google from removing or delisting the mobile apps of the company in the Google Play Store in India. However, on August 3rd, 2023, the Honorable Madras High Court rejected the plaint filed by the company. So the company, we have filed now an appeal. The company has filed an appeal challenging this order. Now, pending the outcome of this appeal, we have made the best estimate for the quarter and recorded a provision towards this disputed service fee. This is the main reason for increase in other expenses in our financials. Despite this, and also having employee salary increments of about 7% in the quarter, we have shown growth in profitability both on a quarter-on-quarter and year-on-year basis. Our EBITDA margin for the matchmaking business in Q1 is at 24.1% as compared to 21.1% in quarter 4 and 23.5% a year ago. This is a growth of 23.5% quarter-on-quarter and 8.4% year-on-year. Marketing expenses are at 43 crores as compared to 45.3 crores in quarter 4, so we have optimized well on this front. Excluding marketing expenses, our margins in matchmaking are at 60% as compared to 62% in quarter 4 and quarter 1 of FY23. On a consolidated basis, our EBITDA margins in quarter 1 are at 17.2% as compared to 15% in quarter 4 and 17.6% a year ago. Tax rate in the quarter is at 23.2% as compared to 15.7% in quarter 4. The tax rate has now come to normal levels. Just to refresh, the lower tax rate last year was due to lower tax on realized gains on mutual funds, which were redeemed to fund the buyback amount. Profit after tax is at 14.2 crores, a growth of 24.2% quarter-on-quarter and 18.5% year-on-year. Share of loss from Astrovision, which is our associate company, is rupees 8 lakhs. Our free cash generation has been robust in this quarter at 23 crores for the quarter. Return on capital employed, ROCE, annualized is about 21%, has increased from 16% in quarter 1 of last year and quarter 4. Our cash balance is at about 350 crores. On the outlook for Q2 margins, our profit after tax in quarter 2 is expected to be better than the levels of quarter 2 of FY23, quarter 2 of last year, same quarter, even if we need to consider a provision for Google case, and that is dependent on the ongoing litigation. We are also working on certain mitigation measures to address the impact. I would like to end with a customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by or on behalf of the company unless it is required by law. Now we can open the floor for Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Prakash Kapadia from Anivet Portfolio Managers Private Limited. Please go ahead.
Yeah, thanks for the opportunity. A couple of questions. If I look at ad spends, they are at a 8-quarter low at 36%. So, wanted to get some more color and clarity. What has changed? Have, industry dynamics become slightly favorable, or, is there some change at our end to do, ad spends from a measurable ROI perspective? What has changed? And, can this trend continue? And, given that we've seen billing and, what Muruga and Sushant just mentioned in their opening remarks, Q2 should be better in terms of, profitability and growth. So, how does, the year look like? Because historically, if I see, we've had 19 crores as our best quarterly profit. So, do we think we'll be able to cross this if this, this spend in ad spends is muted and, that keeps on decreasing as a percentage of sales? So these were my questions.
Thank you, Vikas. So in terms of marketing spend, last quarter, while we planned for some marketing campaign that we did not execute, and by the way, we're launching a new version of Bharat Matrimony, and we're launching a new campaign soon, very soon. So the marketing spend will come to earlier levels. So that way, it's last quarter, one of the quarters. And in terms of the profitability would have been much, much better if not for the provision which account on account of Google-related issues. So in fact, if you look at other expenses moved from 16.3 crore to 20.7 crore, almost 4.4 crore increase in other expenses. Most of the expenses on account of Google-related things. So if not, the profit would have been much, much, much better. So, but in terms of the thing, we continue to drive the growth. The marketing will probably move to the earlier levels because of the point which already made. So.
Okay. So if I understand this correctly, Muruga, you're saying there was some deferment because of the new campaign. It's not necessarily, reading in terms of industry dynamics have changed or, some major change at our end where, we are doing measurable or calibrated ad spends depending on the ROI or to reduce customer acquisition cost at our end. Is that understanding correct?
No, definitely look at the marketing. A lot more goes into the marketing. We look at many things. So definitely, the marketing spend, we look at the various outcomes. Yeah, the industry thing, as far as nothing has changed. It continues to remain at a similar level. It's a more of the campaign which we start, we didn't execute it, and we'll be executing this quarter. Ayurveda industry, the level of competition and the marketing spend remains more or less at the earlier level.
Okay. So only offset to marketing spends could be when, revenue growth becomes higher, that could reduce as a percentage of sales.
Absolutely,
this 44-45 crore kind of run rate is fair to expect.
Yes, exactly.
Okay. Understood. I'll join back if I have more questions.
Thank you.
Thank you. Before we move to the next question, reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Mani, an individual investor. Please go ahead.
Hi, sir. I wanted to understand a couple of things. One, currently, what percentage of your revenue would be dependent on Google Play Store or even, say, app and the other channels, which are website and physical? So that is number one. And number two is, if you can explain, what was the current revenue sharing agreement with Google? Like, did we have to pay a fixed yearly fee for listing? And now, for example, if we assume that the appeal that we have filed in the High Court does not go through, what percentage of revenue are we looking at sharing on a recurring basis that will become like a standard cost that we have to pay Google and also the other places? So these are the two things that I want to understand.
See, let me answer on the Google agreement. The Google has what we call a developer distribution agreement. There are various tiers there. It's not like a single line rate and all of that. There are the various tiers, various percentages. Right now, since we are under the process of litigation and also very sensitive, we are not doing any further comments on this particular tier, percentages and all of that. However, therefore, it is not like a single line easy statement to be referred from the Google developer distribution agreement. So obviously there is a percentage. However, based on the reading, because we have an ongoing litigation and there is nothing certain about all of these things, based on our reading, on the best estimate basis, we have made a provision on this particular case. And based on this, we have given you some broad guidance in terms of even if we include this, what would be our profitability levels in quarter 2? I think that's the way to read this whole, Google case. The other thing is, Google also has said that only in-app purchases will be, covered under this agreement. So for us also, it differs on a month-to-month basis, right? We can't control how many people are actually under in-app. Some will be outside, some will be through website and all of those. So the percentage sort of differs on a month-to-month basis. So broadly, not all revenue goes under this Google distribution agreement. And like we also said that, we are also looking at various measures to mitigate this impact. But even if we consider this impact, I have mentioned to you that our profitability will be better than what we achieved in quarter 2 of last year.
Fair enough, sir. Sir, I had a couple of more things. One is what percentage of our revenue would currently be dependent on Google Play Store or app compared to other channels, number one. And second thing is you can also explain in the same context the 4% number that you had mentioned in a recent exchange announcement. If you can just explain that also, that will be helpful.
Yeah. So, broadly there is a range. We believe it is in the range of 35% sort of a number, 35% plus the in-app purchases. But like I said, it will differ on a month-to-month basis. The 4% number that came in was only an interim injunction. Now, since our plaint is actually rejected, we have filed an appeal on this case, and it will come up for hearing very quickly. The 4% was only an interim injunction given by the court.
Okay, sir. Thank you.
Thank you. Next question is from the line of Kunal Shah from Carnelian Asset Management. Please go ahead. Mr. Kunal, your line is unmuted. Please go ahead. As there is no response from the current questioner, we will move to our next question from the line of Pulkit Singhal from Dalmus Capital Management. Please go ahead.
Thank you for the opportunity. I have a few questions. First one is on the revenue growth on a quarter-on-quarter basis. We have seen a strong quarter-on-quarter revenue growth for now 2 quarters. 4Q was 4%, I think, in matchmaking, and 1Q is 8%. Is there anything to read in this from a structural basis, or would you attribute it purely to seasonality?
No, actually, we are continuing to execute things. So it's Q2, and definitely Q4, Q1 we definitely have a better quarter. Plus also we continue to execute things. It's a combination of seasonality plus also our execution, things which are executing.
Okay, and I mean, anything from, industry perspective, is the industry itself picking up, or would you largely attribute it to your own execution?
I'm not sure the industry per se, because, I think we are executing things, we are driving things. We expect to continue to drive the growth momentum on our matchmaking business. So I'm not sure whether what others are, we have to wait and see how the other players are doing all the things. But it's more than industry, it's more of how you are executing things.
Understood. No, the question really is, we've had usually single-digit revenue growth in the last 5 years, barring FY22. Is there anything that you see that gives you confidence of being able to deliver double-digit growth now because of things that you're doing differently, or, because every time we talk about double-digit growth, but it comes at single-digit. So that's why I'm trying to come from an annual basis.
Absolutely. I think we are slowly inching toward the double-digit growth. In Q1, we see the high single-digit. Q2, it's high single-digit growth. we may touch possibly, I don't know, maybe high single-digit growth is what you can take it. And, definitely are moving to the double-digit growth trajectory-wise.
Secondly, is on the A&P cost. We went from 56 crores to 182 crores in A&P over the last 5 years. The entire incremental A&P of 126 crores that we spent, in fact, we didn't even recover it from revenues. The revenue increment was only 120 crores. So I know we attributed to competition for being one of the reasons. But two questions here. One, how are you even effectively evaluating your ROI here? I mean, how does it make sense to spend 126 crores incremental without getting corresponding revenues? And secondly, when you talk about competition, actually Jeevan Sathi's competitive intensity seems to have peaked out 4 quarters ago because their financials are getting better. The losses are coming down for the last 4 quarters. So I'm surprised you're saying that the competition intensity is remaining high.
So, look at the marketing spend, increase in marketing spend, actually, every market, the marketing spend is much more than required level because of everyone is stepped on the market. It's a more of what is required to spend when everybody is stepping. It's a more of everyone need to up the marketing spend. It's a more of people are spending much more than every market, what is required. So we also need to step to the marketing as a number one player. Number two is that while Jeevan Sathi reduced because Jeevan Sathi did a campaign instead of talking about things, they had a campaign in South India and all, which they stopped it and now they're extending only to North and West. They are not grown. If you look at the Jeevan Sathi and all, I think they have sort of degrown the comparative revenue what they have and all. When they are withdrawing from the market, reducing the market in some markets, so they also change the business model. All this, but they also, the revenue has gone down, not gone up. So if you read that revenue, they have only gone up. So, yeah. So that's it. More like marketing spend is that while the Jeevan Sathi one of the players, the other players as well. So there's other number 2 player as well. So across India, not like one player because this category has one more player also. So marketing spend, we're looking at across India. Everywhere the marketing spend is more than we believe, it's much more than what is required. It's a more of increased marketing spend happening. The people are hoping that will give them growth. I've been saying many times again, I think marketing is one of the one lever in the business that's one of the one lever. So at this point of time, we are spending higher amount of marketing money, which was necessitated by the increased competition. Tomorrow, when the intensity reduces, we also do some marketing spend. At this point of time, it's not the case, so we have to continue to spend this level or even request take higher level also. Well, Jeevan Sathi, since you mentioned about Jeevan Sathi, they are only North and West. There are other players that they are in other markets, meaning advertising other markets.
So, last question is on the app itself. We were doing some analysis and our app ratings for the core app is lower than both the competitors in both the platforms. At the same time, I noticed that the number of versions that we had, the refreshes are a lot lower in terms of the intensity every month or every 2 months. In fact, the other apps do it a lot faster. So I'm just wondering, we have such a huge employee base, we talk about tech, and we have a dominant market share, but our app metrics are not reflecting that. In fact, most of the reviews are quite bad, the recent reviews. So your comments on that?
Yeah, so look at the thing for us that you look at regional apps, be it Tamil, Telugu, Kerala, Punjabi, all are regional apps because for us the regional apps are much more stronger. Bharat Matrimony serves one set of the market, like a regional app. We look at Tamil Matrimony, Tamil Nadu, Telugu Matrimony in Andhra. So look at all the regional apps, the ratings are much better, all at 4.2, 4.3. In terms of refreshing, because we've been working on the much improved version of Bharat Matrimony, which is all the regional sites, which is expected to go live very soon. Post the launch, we see that we will have one of the much better app product compared to other players in this category. Once this goes live, we see that the refreshment will be much better because it's a big change, a fundamental change in terms of the whole thing is getting approached. So it's more of worked on, is almost literally been working on it for a very long time. So now, henceforth, see the refreshment will be much better.
Understood. Thank you so much. Just one quick question on this Google, the expenses. Suppose this was to be normalized, suppose, we lose the case and this is supposed to be, so does this get reduced from revenues or would it continue to be added in other expense? How does the accounting work typically? Right now we have made it as a provision.
It will mean other expenses only because revenue is separate with all other expenses.
Got it. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Next question is from the line of Sonal from Prescient Capital. Please go ahead. Sonal,
Hello?
your line is unmuted. Please go ahead.
Yeah, hi, this is Sonal. Am I audible now?
Yes, you are audible.
Sir, my question is with regard to this litigation we're having with Google. So, just wanted to understand, you mentioned to somebody questions before me that roughly 35% of your top line is linked to Google. Just wanted to understand the materiality of the impact if this expense was to be regularized. How much margins basically would be shaved off as we speak?
Yeah. So like I alluded to earlier, because it's an ongoing litigation and there are various sensitivities involved and there is a service fee involved, and like there are various rates, the DDA is not like very straightforward and all of that, we have provided on a best estimate basis for the quarter, what we believe is right. Okay. So what we have mentioned is, if we continue to provide for the next quarter as well, in spite of that, our profitability will be higher than what we achieved in Q2 of FY23. We've also mentioned that mainly the other expenses increase is also because of, the Google case, what we are pursuing. Therefore, because of all the sensitivities, we are unable to, give you exact amounts and all of those things. Once the case becomes a little more clear and there is some more direction on it, because as you have seen, we made already a couple of stock exchange disclosures, which is changing very dynamically. So the plaint was rejected. We have filed an appeal. The appeal is coming for hearing soon. So it can go into, various stages as we go along. And therefore, because of the sensitivity, we are now saying, we are giving you broadly what we believe will be a profit guidance in spite of including the Google provision. Obviously, if the Google provision is not included, it will definitely be higher. Yeah.
And also, this is a multiple forum. This is also CCA also. Because CCA already given the verdict on this one, but again, this is also been disputed by the Google and all. Once again, we went to the players with all the people who are with filed with CCI. Also once again went back to CCI on in our view that Google has been not following the CCI order. Which mentioned that, Google should not be selective or arbitrary in terms of the Google building choice. So anyway, this case is a multiple forum.
Yes, sure. Sir, I have a second question. Any specific subjective guidance on the billing, which has gone up by 2.9% quarter on quarter and 6.9% YOY? Is this low? Is this quarter on quarter growth low? Or is this like kind of a seasonal number and this number will ramp up as we go further in FY24? If you could just guide a little bit more on subjectively on that.
Yeah, definitely. Well, the Q2 is a normally seasonally low quarter, but definitely we see that on a year-on-year growth, we're definitely inching towards double-digit growth thanks to the various steps what are taking, various initiatives what are taking.
Yeah, just want to add, the number you're seeing 2.9% quarter on quarter is on billings. But if you see revenue, right, even in matchmaking, our momentum has improved considerably. Like, for example, it has improved 8% quarter on quarter growth, so which is almost like a high single digit sort of number on revenue. So I think that's a good number, or that's a good outcome for quarter one. Obviously, the consolidated billings of 2.9 you're saying also has marriage services, which sort of came down a bit this quarter because of various measures we are doing and creating a better ecosystem. So, but on matchmaking, I think the revenue momentum has continued reasonably well on a quarter-on-quarter basis.
Got it. Okay. Thanks a lot. That's it from my side. Thank you.
Thank you. Participant, to ask a question, you may press star and 1. Next question is from the line of Jana N. Individual investor. Please go ahead.
Hi, thank you everyone for the opportunity. My first question is that is there any long-term plan for Matrimony to enter new markets like which we entered recently, Bangladesh? In the long term, not in the near term, like let's say 5 to 10 years down the line.
Okay, what is the next question? Is it any other questions? You said a couple of questions.
Next question is that simple one. We enter the marriage services like Mandap.com. Similarly, are we have any plans to launch new services in the long term, let's say 5 to 10 years span?
Yeah, we definitely like Bangladesh. We entered Bangladesh. Bangladesh is definitely one of the leading players there. So it's a small at this point of time, but definitely look at the opportunity as you progress. Look for various opportunities, various markets to enter. We continue to evaluate those opportunities. Like Mandap.com, yes, we continue to expand our offering or continue to look for opportunity wedding services. As and when feel opportunity appropriate, timings appropriate, when you are ready, we'll continue to expand into those opportunities.
Okay. Just to ask a follow-up question, do we have any market research team internally or just how it will be tracked?
Which one market?
New markets. Let's say if you want to enter new market after 5 years or new service like Mandap after 5 years, are we have any internal market research team or how do you arrive at that point?
There are various ways. There are you have internal team, you have internal leadership team. So we have people, leaders, and sufficient signal to decide. Based on that, we decide which market or which business to enter. Yeah.
Okay, all right. Thank you.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Participants, you may press star and 1 if you have any question. Next question is from the line of Anuj Sharma, M3 Investments. Please go ahead.
Yeah, thank you. I don't know if this was answered, but our ATV has come down this quarter. What's the trend out there?
Yeah, so the ATV is a combination of various things. It has basic packages, it has personalized packages, it has even Jodi, which is at a lower ATV. So it depends on the combination of all these packages that the ATV is a derived number. The second thing is we don't have a target ATV. ATV is an outcome. What we do is we believe that on a daily basis, based on all our analysis, we have to charge a particular number to a customer, and we have methodologies to determine that based on past inferences. So that's how the ATV is an outcome. So we don't have like a target ATV that we measure ourselves on. It is also a resultant of all the segmentation strategies that we have. The ATV is at a particular level. So we are not very disturbed or whatever that, the AT has come down. So one quarter it may come down. If you see the last 7-8 quarters, it has always been in a particular range, and the reasons for that are because of that. However, I think it is more than the ATV. It is actually good to see the paid subscriptions. If you see whatever we are doing, the paid subscription is growing at 11.5% year on year. So which also means that, whatever strategies we are adopting on the ATV, on a segmentation and all that, it is working on the paid volume spaces. I think that is the way to see this whole track of ATV.
All right, that's helpful. My second question is on Elite. How is it shaping up, and what is the proportion of revenues now Elite is contributing?
So Elite is one of the lowest in kind of segment in terms of business, but again it's kind of started doing well. But because of competition reason, we don't give the specific revenue of Elite. But definitely we are looking at that one of the growth opportunities.
Okay. And one more, if I may question, the marriage services, we have been putting a lot of efforts. When do you expect benefits from those efforts to show? Which will be, I think the marriage season would kick in later in. You expect marriage services to be ready with the bouquet of offerings, or it will still take more time? Thank you.
In fact, making some changes on wedding services. Our plan is to achieve a sales-based break-even sometime this year. So we are working to the objective. So in fact, some of the changes, why some drop in revenue because of making some changes. So we are sort of fairly confident of getting into a sale-based break-even, maybe even on monthly basis. So before the end of this financial year, I think that's the goal we're working towards it. Also, work on what are the strategies for driving the growth and further on wedding services. The immediate thing, the plan for this year is, as I said, get to the achieve the sale-based break-even.
Okay. All right. Thank you so much. Thank you.
Yeah, thank you. Yeah.
Thank you. Participant, to ask a question, you may press star and 1. Next question is from the line of Concall Shah from Carnelian Asset Management. Please go ahead. Mr. Shah, your line is unmuted. Please go ahead.
I think we are not able to.
Yeah, it looks like we have challenge.
There is no response from the line of Mr. Concall Shah.
Again, some connection issues.
A reminder to the participant, anyone who wishes to ask a question may press star and 1.
There are no further questions.
As there are no further questions, I would now like to hand the conference over to the management for the closing comments.
Yeah. Thank you. Thank you, ICICI, for hosting this call. And look forward to speaking with you during the quarter. If you have any questions, please do write to us. Thank you.
I think it looks like Anuj Sharma.
We have one last question from the line of Mr. Anuj Sharma from M3 Investments. Please go ahead.
Yeah, thank you for taking me out of this queue. See, one question on this litigation with Google. I think a lot of people or other service providers will also be affected due to this particular charge. Now, do we see it seems more like an individual fighting versus a company? Do we expect more and more companies to join together against this, or it will be more of an individual-driven fight?
No, it's a lot more companies. Almost around 20-25 companies are in this fight. Even Madras High Court, almost 15 to 20 companies have joined the fight. Apart from that, we see the OTT players also, they went to CCI. I mean, it's affecting a good number of companies because it is about all the companies selling digital goods and services. That includes matchmaking, dating, probably that tech companies and media companies, OTT players. So many companies getting impacted. Even that the companies invested, so many companies are part of this thing because it's sort of selective in people offering digital goods and services. Yeah, definitely a lot more companies. So it's literally, if we call it Google tax, taking a certain percent revenue, which you've been fighting on multiple. So it's not one company.
All right, that's helpful, and wish you all the best. Thank you.
Thank you so much. Yeah.
Thank you very much.
Yeah, if there are no further calls, thank you, ICICI, for hosting it. Thank you, Abhishek Banerjee, and all the participants in your interest, and look forward to continue to stay in touch. Thanks so much.
Thank you very much. On behalf of ICICI Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.